do a mic check. Dan, can you hear me okay? Let's get Dan Pilla on the stage here.
Yeah, I can hear you just fine, Jay. How about you?
All right, great. And we got a great show, especially when you think about the subject. What if you can't can't pay your taxes by April the 15th? Now, Dan, when we're talking about this subject, coming off of 2020, millions of people lost their jobs. Millions of businesses went under. Congress took forever to get the second wave of aid. People are going to probably have problems paying taxes, I would think. I mean, what's your take on this, Dan?
Well, yeah, Jay, there's no question about it. Look at under normal circumstances, Jay, without COVID, without all the rest of the insanity that went on during 2020, not the least of which was the riots, all across our country that did tens of billions of dollars of damage to property all over the country. Never mind all that stuff. Set all that aside. Ordinarily, you have about anywhere between 3 to 3.5 million people that can't pay their taxes on time. All right. They file their tax returns without the money, or they don't file their tax returns at all. And they end up in a situation where the IRS is in their face. Now you factor in all of the things that have gone on with the year from hell, so to speak, 2020, all of the things that went wrong during 2020. And there's no question in my mind that we're going to have a massive number of people out there. They're going to have tax problems. I mean, let's just take this unemployment just as an example. A lot of people received a lot of money from the federal government for unemployment compensation as a result of losing their jobs because of the COVID shutdown. Okay, well, we can debate whether the unemployment was good or bad, whether it should go on or not. Forget all that. Just never mind all that. The fact of the matter is, here's what's going to blindside millions of people. Unemployment income, Jay, is taxable income. All right, it's taxable income. It's just like wage income. It's no different than if you get a paycheck working for the ABC company, you got to pay taxes on that. The difference is when you're working for the ABC company, the wages you earn have wage withholding taken out of it. And so generally speaking, when you file your tax return, most people get a tax refund because they pay too much. We talked about that last time on the program. Folks can go back and look at that tape, how not to get a refund, how not to overpay your taxes, I should say. But the fact of the matter is the withholding puts people into a position where for the most part, at least, they don't owe the IRS. But when you get that unemployment compensation, Jay, there's no withholding coming out of that. All right, you got to pay the tax. You got to pay the tax when you get the money. Well, the problem is that most people are getting unemployment compensation at a fraction of their wage. And so maybe it's half, maybe it's 60%, maybe it's 40%, whatever it is. Generally speaking, the bills don't go away even when the income did. And so now you've got this big tax liability at the end of the year. And it's going to be a huge problem, Jay.
Wow. Okay, so now we here at the Pilla Tax Academy, we provide solutions, strategies. Everyone needs to be paying attention to PillaTaxAcademy.com more than ever, in my opinion. And so, Dan, I've come up with about 5 things here that looks like some strategies some people can do that we've discussed. Let's go over those 5 things. So, Dan, for example, number 1, what if a person can't pay by the 15th? Does getting an extension help them at all?
Well, this is a great deal there's a great deal of confusion that revolves around this extension, Jay. And so let me sort this out. Now, before we do that, I want to make it clear to our viewers here that this program is never going to be about hopelessness and fear and desperation. All right, what we're going to do always is stripe the field with the problem, identify what the problem is, and then we're going to solve the problem, right? So this is the key to the Pilla Tax Academy. When you leave here tonight, you're not going to leave fearful and hopeless. You're going to leave here knowing how to deal with the problem so that you don't get yourself behind the 8 ball with the IRS. So I want to make that perfectly clear. So let's talk about the extension. Here's probably the single greatest misunderstanding with the filing extension that comes down the pike. I deal with this all the time. When you submit to the IRS the request for extension of time to file your tax return, that automatically gets you 6 additional months to file your return. All right. I'm talking, Jay, about IRS form 4868. That's the application for an automatic extension of time to file the tax return. You don't even need a reason, Jay. If you need more time to get your return together, your records are missing, you've been through some sort of disruption, you moved your house from place A to place B in the record, whatever the reason, or you don't even need a reason, right? If it's just a religious principle to you that you want more time to prepare your return and submit it, you can submit form 4868, and that gets you 6 additional months to file the return without penalties. But here's the rub, Jay, and this is what people don't understand. The extension of time to file the return does not give you more time to pay the taxes. The taxes are still owed on April 15th, even if you got the filing deadline pushed back. All right, so you got to think in terms of paying your taxes by April 15th or using some other strategy. If you can't pay by April 15th, the form 4868 is not going to relieve you of the obligation to pay by April 15th. And so that means if you pay late, the IRS is going to assess penalties for failure to pay the tax. We talked about those last week. We can talk about them some more tonight, but that is the problem that people face, is this confusion with the form 4868. It does not give you more time to pay the tax.
So the 4868 form has to be filed. That means that the extension isn't automatic. Is that correct?
Well, the filing extension is automatic. But
Okay.
let me talk about a different extension now, Jay. Okay, there's 2 different extensions. And let me be clear about this, because the one extension, the extension of time to file your return, everybody knows about that, right? Everyone's heard of that. Well, I'll just get a filing extension. Okay, fine, that's simple. Here's the extension that's frankly a secret that the IRS never wants to talk about. And I've beat on the IRS in the past about not telling the truth about this form, and they still don't do it. The form is form 1127, form 1127. It's called an application for an extension of time to pay your taxes. Now, if this form is submitted on or before April 15th, you can get up to 6 additional months to pay your taxes. But the point here, Jay, is this this extension is not automatic. All right. The 1127 payment extension is not automatic. The form 4868 filing extension is automatic, but the payment extension doesn't give you more time to file the return. The filing extension doesn't give you more time to pay the taxes. So you got to be thinking in terms of 2 different extensions. The form 1127 is not automatic. That means you have to give the IRS a reason. All right, now let's take a minute and talk about what that could be, Jay. In order to justify the IRS giving you more time to pay, you have to demonstrate that you exercised ordinary business skill and ordinary business prudence. In other words, you did the things that an ordinarily prudent business person would do to pay your taxes on time, but due to circumstances beyond your control, you could not pay on time. Now, all you got to do is pick up a newspaper and know what's going on in the country in 2020 that would have put people into a position where they can't pay on time. All right. But generally speaking, we're talking about any circumstance here, Jay, that would be an unforeseen circumstance that you could not reasonably foresee that would stand in the way of you paying your taxes on time. It could be an illness, an injury. It could be a death in the family. It could be a fire, flood, hurricane, a natural disaster of some kind. It could be lost job, failed business, failed marriage, drug or alcohol problem, any of these kinds of things, Jay, that would interrupt life and put you into a position where resources that otherwise would have been designated for taxes had to be redirected to deal with this catastrophe that you could not foresee. What we're talking about here is a nationwide disaster area. Let's keep this in mind, Jay. In March of 2020, coming up on a year ago, former President Trump declared the entire United States of America a disaster area. All right. Everybody in America is living in a disaster zone, and that declaration has not been rescinded. So all of 2020, we have been in a disaster zone. So if there's circumstances that have been visited upon your life as a result of this COVID situation or any other factor you can name, that has a bearing on whether the IRS is going to grant this extension. Now, Jay, I've been advocating this extension for more than 40 years. I've helped thousands of people get payment extensions using this form, and generally, I'll be perfectly honest with you, Jay. Generally, it's a bit of an uphill battle to get IRS to grant these things. Remember, they're not automatic; they have to be granted by the IRS. But under the circumstances that we're in now, I cannot imagine that the IRS is going to nitpick these these payment extensions for folks that have the least bit of connection with their financial problems to the disaster that's going on out there. I think that this is going to be, frankly, a much easier sell than it's ever been before.
Right. That makes sense. Dan, there's going to be people out there because of the devastation that are like, look, I just don't feel like filing. So what if a person just doesn't file?
Yeah, and that's a mistake, Jay. You add insult to injury in a big way when you don't file the return. I'll tell you what, I've seen this happen 1,000 times, where people don't file their tax returns on top of not paying the taxes. What happens when you do that is the IRS adds in the penalty for failure to file on top of the penalty for failure to pay. All right, so now here's what happens. The failure to pay penalty is figured at 1% a month for a maximum of 25 months or 25% plus the interest. The failure to file penalty is charged at the rate of 5% a month for a maximum of 5 months, 25% plus the interest. So what happens when you don't file your tax return? The penalties double. It makes the problem twice as bad. So don't fail to file the return. You need to file the tax return on time, even if you don't have the money to pay the tax, Jay.
See, this is great information and things that people need to know. Listen, get over to PillaTaxAcademy.com and get dialed in. We got some free information there. Also, there's information that you can empower yourself, tools that you can use to become what I call tax literate. We've got to get rid of all the tax illiteracy, and we got to educate ourselves, because it's the number one expense in our lives is taxes. And I'm sure Dan would agree with that. He deals with these issues every single day, huh, Dan?
Yeah, there's no question about it, Jay. Listen, I've dealt with hundreds of financial planners over the years, both from a professional standpoint and helping them help their clients. And I've even had a few financial planners in my life that have been clients of mine. And what financial planners will tell you is that the single biggest investment in your life is your house. Well, that's just not true, Jay. I mean, the single biggest expense. Now, of course, a house is an investment, no doubt about that, to the extent that it appreciates in value. At least it's a store of value. Generally speaking, they don't depreciate, although that can happen too. We both know that. But the fact of the matter is the single biggest expense that the typical American will ever face, Jay, is their tax liability. All right. When you look at federal, state, and local taxes combined, the typical American is paying about 40%, 40% of their income in taxes. And I expect that to only go up in the next 4 years. There's just no doubt in my mind about it. So that's the single biggest expense that people have. Not only that, the expense is one thing, Jay. If it was just a matter of, here's my check, send in half of it, that'd be painful enough. But at least there's no complication involved with it. When we're talking about complying with the tax code, there are 4 million words in the Internal Revenue Code, and that doesn't even include all the stuff that's happened in the last couple of years. And it's going to only get worse in the next couple of years as the new incoming administration promises to stir the pot with respect to the tax code yet again. So it only gets more complicated. Every time they simplify the law, Jay, the law gets bigger and more complicated. And so people need to become tax literate. Now, one of the things that you're going to find over on PillaTaxAcademy.com is my Taxpayers' Rights Mastery course. And one of the things that I talk about in the Taxpayers' Rights Mastery course is this subject right here: the difference between the Form 1127 application for an extension of time to pay the tax versus the Form 4868 application for an extension of time to file the return. I demonstrate the difference. I show you the forms. I show you how to use them. I show you how to make an argument to the IRS that will justify get an extension of time to pay. Remember, that extension of time to pay is not automatic. All right. You have to demonstrate to the IRS that there is reasonable cause to justify this extension. And so there's got to be some explanation with it. And of course, we talked about COVID generally, but COVID might not be your reason. There might have been some other issue going on. Whatever your reason is, that's fine. You need to express that to the IRS very clearly and specifically.
You know what, Ken? An important question regarding the extension. You talked about if I file the proper form and get the 6-month extension, what if 6 months just isn't long enough, especially with all that's happened in 2020?
Yeah, that's a good question, Jay, because that's very common. And people tell me that all the time. Okay, 6 months, great idea, Dan, but I owe the IRS 13 grand. I can't pay them in 6 months. So now what do I do? All right, well, now you got plan B. One good thing, Jay, about having 4 million words in the Internal Revenue Code is there's always plan B. And plan B, when we're talking about failure to pay, is using IRS Form 9465. Form 9465, this is called an installment agreement request. This form will set the wheels in motion to get you set up on an installment agreement with the IRS. Now, I'm going to tell you a little secret here. All right, this is a little secret you need to know about when you're dealing with these unpaid taxes. If you owe the IRS less than $50,000 and you can pay them within 72 months, generally speaking, this is not true across the board, but generally speaking, they will rubber stamp any proposal you make to them if it's made on Form 9465. All right, so how many people know about Form 9465? Not very many people do. And this is a form, frankly, that was created as a result of pressure I put on the IRS in the early to mid 1990s because they were just simply lying to people about their right to have an installment payment. There's always been a right to an installment payment, Jay, and the IRS has lied to people about it. Well, now they've got a Form 9465 that allows you to make an application to get that installment payments agreement set up. And here's the other thing that's very important, Jay. This is a very, very important tool to prevent enforced collection action. Because once you submit that Form 9465 and request the installment agreement, the IRS is legally stopped from enforcing collection against you until they rule on that installment agreement. And if they establish the agreement, if they set it up, now they can't levy a nickel's worth of your assets as long as you make the payments under that agreement in full and on time. So, Jay, this is an outstanding way to stand in the gap to keep the IRS from running you over when you owe taxes that you can't pay in one lump sum. This is a way to pay the taxes on your terms, not theirs. And again, these are things that I talk about in the Taxpayers' Rights Mastery course.
Yeah, I think people, they just get, discouraged and try to ignore the problem, and then it ends up making it worse. That's where education, information, training empowers you not to make a problem worse. And so, Dan, here's another big question. What if somebody just says, listen, this is so crazy what's happened to me. I just can't pay it off. Can't do it.
Yeah. That's also a big deal, Jay. And that arises in a situation where a person is either unemployed or underemployed. We talked about this unemployment compensation throughout 2020. The Consolidated Appropriations Act is going to extend that unemployment, so people are going to continue to get some unemployment. But the fact of the matter is, most people are getting unemployment at a fraction of what their normal wage was. So if you were making $5,000 a month and your unemployment is $3,000 a month, okay, the $3,000 a month helps. That's true. But $3,000 isn't $5,000 and your bills didn't go down just because you're unemployed. The bills didn't go away. All right. So if you're in a situation where you don't have enough money to pay your necessary living expenses, right? If all of your money is consumed paying necessary living expenses, then we go to Plan C. All right. Plan C is a program that the IRS refers to as, I refer to it as uncollectible status. The IRS refers to it as a determination as being currently not collectible, what we call CNC, currently not collectible. And what that means is the IRS makes the determination that under your present financial circumstances, you do not have the ability to make a payment on the delinquent taxes. So what they do, Jay, is they push the hold button on the delinquency. They put your case on the shelf and it sits there. All right. So there's no enforcement action. They're not in your face. No wage levies, bank levies, property seizures. None of that stuff happens while you're in that uncollectible mode. All right. So the good news is they freeze the collection account. They stop collection entirely. There is some bad news. The bad news is the penalties and interest continue to run and the bill doesn't go away. It's not like they just erase it. Don't let somebody tell you that uncollectible status determination just simply makes the bill go away. I hear that all the time from people that are getting misinformation out there. That's not what happens. But what it does do is it keeps the IRS off your back and out of your face until you can get back on your feet. And then, Jay, if your circumstances have changed to the point where you simply can never pay them, now the door is open for other negotiation strategies that will deal with the bottom line tax liability and get you into a position where you can get that resolved once and for all.
All right. All right. This information is priceless. If you guys appreciate this free information, will y'all do something in the comments? Just say, Dan, we appreciate it. Thank you guys for having this show. This means a lot to us. It's helping us. It's empowering us. Give us some comments. Share this with other people, because there's going to be a ton of people that's going to get hit like a ton of bricks because they're not educated. Get plugged in to Pilla Tax Academy. If you are a business owner, as we close this out, I want to have Dan touch on this. If you are a business owner, you need to definitely get the business mastery course that Dan did. It's going to put you leaps and bounds ahead of the average taxpayer business owner because they just don't know. And Dan has put together a mastery course, and it doesn't cost you that much. Right now, I think you get $100 off. It's normally going to be $495. Right now, you can get it for $395. But get over there and get it. It's live now. It's actionable steps that you can take to empower yourself right now. And if you're just an everyday taxpayer, get the Taxpayers' Rights Mastery course so you know how to maximize your situation. And then if you're a tax professional, you definitely want the tax defense conference that Dan did in Las Vegas. That was 2 days worth of information. You've got to have it. Plus, it comes with continuing education credit. So, Dan, talk to these business owners about what's going on, because a lot of them have struggled because of 2020. Why would they need to take that business mastery course?
Well, first of all, Jay, in the business mastery course, I identify the 15 most common problems that small businesses make in dealing with their business. I've been litigating with the IRS, Jay, for over 40 years. I've had thousands of small business clients over those 40 years. I've worked with those clients through audits, through appeals, through collection situations, through litigation in the United States tax court. All right. I've seen every kind of tax case you can imagine. I've seen a few that you can't. I got involved in this business in the first place because my father's small business went south and got in trouble with the IRS. That's how I cut my teeth, was dealing with small business owners that have tax problems. So, Jay, the Small Business Mastery course is going to identify the problems that businesses face, and it's going to show you how to stay out of trouble with the IRS. And so now, having gone through 2020, businesses across the country have had significant cuts in their revenue. Maybe they got behind on their employees withholding taxes. All right. This is the single biggest problem small businesses have, is complying with the myriad of employment tax regulations that come along with having employees. I've got a ton of information in this package that walks you through the compliance part of dealing with these employees, so you don't get sideways with your workers. There's a ton of businesses out there, Jay, that use independent contractors to perform services for their company. And they say, well, I'm just going to use an independent contractor. I'm not going to worry about employees. Okay, that's great too, except here's the thing. The question of whether your independent contractor is a legitimate self-employed contractor or an employee masquerading as a contractor is one of the most litigated issues there is in the United States tax court every year. All right. It's one of the things that the IRS focuses on intensely from a compliance standpoint, year in and year out. You need to know this stuff if you're a small business owner. I show you exactly how to use independent contractors completely legally and properly so you don't get attacked by the IRS. And when you recognize that you need to use employees and not contractors, I show you precisely how to stay in compliance with your employee obligations. This is stuff that businesses need to know, Jay, because they don't learn it anyplace else.
This is like, to me, lights out. We got one question to come in, Dan, before we close out the show. Maisha asked, how do we answer the new item on cryptocurrency? That's now on the form, as they're saying.
Well, it depends what form we're talking about. First of all, if we're talking about the tax return, the tax return treats cryptocurrency just like any other capital asset. So think of cryptocurrency as a stock. You buy a share of stock in the XYZ company for $10 and you sell it for $15. You've just realized a $5 profit. And now the question is whether it's considered long-term gain or short-term gain. And that's how it's taxed. If it's long-term gain, it's taxed as capital gain with the benefits of capital gain rates. And if it's short-term, then it's taxed as ordinary income. So you got to track the trades. Now, if we're talking about cryptocurrency in the context of collection issues, if, for example, the IRS is looking for a financial statement from you because they want to know what your income and expenses and assets and liabilities are for collection purposes, there's a question now that the IRS asks on IRS Form 433A and 433B. These are the financial statements that they want from you when you're in a collection situation. Then you have to disclose cryptocurrency on that form, and that's just a matter of showing it as an asset on the form with its current value.
This is critical information. We're pouring out a lot of great content. Get over to PillaTaxAcademy.com. Here's what I want everybody to do. I want everybody to go over and click on products. And then I want you to scroll down and look at all the benefits and value you get with each one of the packages. I'm looking at here on my computer screen over here right now. It's just loaded. It's going to empower you and make you a part of what we're doing on Pilla Tax Academy. Also, make sure that you get on Clubhouse, because Dan and I are doing special shows on Clubhouse. It's a new hot social media app. It's crazy. You can follow me at Jay Nolan. You can follow Dan at Dan Pilla, and we'll come in and do some unbelievable shows. Right now, I actually have my own club room called the Get Right Club. Why is it called the Get Right Club? Because a lot of people got things wrong. We're going to help them get it right. So, Dan, it's been a great show. Any final words for you, Dan? Get here.
When I did a show on Clubhouse, we spent an hour and a half live answering questions of taxpayers and business owners across the country that have all kinds of tax compliance questions. And that's one of the advantages of this Clubhouse. Now, let me leave you with this thought. I'm going to end the way we started, and that is there's no such thing as a hopeless tax problem. I don't care what your problem is. I don't care how long you've had it. I don't care what you've tried to do to fix it. I don't care who's told you you can't fix it. There's no such thing as a hopeless tax problem. There's always a way to solve that problem. So get over to Pilla Tax Academy right now, check out the products, and invest in your future so you don't get run over by the IRS.
It's awesome information. Thank you, everyone. Being a part of the show, share this with somebody that you know, that you love, you like, you trust. You want to help them become tax literate. And we'll catch you on the next show next week. Till the next time. Bye-bye.
Good night, Jay.